So many people are like, well, I just need capital to get started, but they wouldn't know a deal that hit them in the face. No one is ever going to ask how much you have in your pocket. No one cares. I think my first question would be, do you know what a deal looks like? And not just like, oh yeah, like a nice area, location. Like I'm talking like, do you understand the go-in operations? Do you understand what happens when we increase rent or do cost takeouts? Like how does that affect cash on cash, DSCR, IRR? All of those metrics that we care about, I think are really important. And I know in my life, I was in the place where I was like, if I just had a bunch of capital, I could just go do amazing things. But I also did not understand all of these things. I thought I did because I had bought a couple duplexes and single family. I thought I was like a really well-versed real estate investor. What happened though, check this out. What happened is once I figured out what a good deal looks like and I understood how to negotiate it and put the numbers together and pro forma like you and I do, Trav, like I understood that. The capital started to be attracted to, it was attracted to me. It started to want, it wanted, in other words, capital wants good operators, people who understand deals. There's obviously some other tactics to draw capital to you, which we can talk about. But if you don't understand the deal, then you're not going to attract capital. You might attract maybe your dumb uncle who just doesn't, he's like working.
There you go. Consulting everybody's uncle. There you go.
He's like running around with a brainstem. He has a lot of money for some reason. Maybe you're lucky like that. But the thing is like, it's like anyway, so I'm just saying not everybody has a dumb rich uncle. So you've got to get good at understanding deals because when you're good at understanding deals, you know how to make them, you know how to find them, negotiate them, and then you can start putting the pieces together to attract capital. Does that make sense?
I mean, yeah, it makes sense to me. I do this every day with you, Mitch, but I think people are hung up on you insulting their dumb uncle or their dumb aunt. I don't know. I mean, also, I think another misconception is that I'm looking for, because we do larger assets, right? I'm looking through LoopNet or Crexi. I look at a deal. It's overpriced, I think. My cash on cash is low, I think. I think it's overpriced, whatever the case is. And something that we preach in the masterclass and we preach in our elite mastermind is that deals are made, not found. I would say a much higher percentage, maybe north of 75 to 80% of our deals didn't look great when you just looked at the price and the profit and the loss in a rent roll. But I think if you dig in, there's so many different factors. Like, let's just take this one that we're hopefully going to get into contract here soon. We understand this particular asset class, it's mobile home parks, because it's all we focus on. And we're looking at the expense ratio. It's a great area, by the way, probably one of the better areas that we've purchased in. But we're looking at the expense ratio and we're like, well, with this utility setup, why are expenses so high? And a lot of people would just see a large expense, a low net operating income, low cash on cash, and move on. But we stop there and we go, well, why are the expenses high? And then you dig into the profit and loss and you spot anomalies of areas that don't seem right. Obviously, we'll have to validate a lot of that in due diligence, but it gives us reason to explore more. Also, the revenue side. We're like, I absolutely see that there's upside in rents. So there's a revenue increase, there's a cost takeout potential. But also just in Mitch's negotiation, he realizes this guy's in a 1031 exchange. He has got a hard deadline to exit this property because he's moving it somewhere else. And we don't say, we just take that in, but we realize that there's going to be some leverage on our side that we have. We're going to be in a much stronger negotiating position because he needs to sell the property way more than we need to buy the property. And that's always a good place to put yourself in a negotiation standpoint. So between understanding where the seller's at, where their motivation is, potential cost takeouts, rent upside, and other factors, we can actually take a deal that other people are passing on because this is on market because they're just looking at the price per pad, the price, costs, net NOI, and just moving on. We stop and we're taking all these inputs and we're deciding we want to dig in further.
Yeah, I mean, that's a perfect example of how deals are made, not found. This deal isn't great at the asking price, right? It's okay. But because we've got understanding of the seller's needs, we've got them down $300,000 so far. We understand cost takeouts. We understand the P&L. We understand the numbers. By the way, numbers in commercial real estate are not that complex. It's plus, minus, and a little bit of division. But like, you have to understand it. Let's just say somebody is like, they take the time They read our book, they join our mastermind, they go to the master class. They're like all in. Okay. Let's just say, and they have no money. Maybe they have a couple properties, a duplex or whatever, and they understand now how to find and make a deal. How does the capital happen? Like they're still wondering, like, where does this come from?
We've seen that in our elite mastermind where people will come in and focus heavily on going through Accelerator, which by the way, people get if they sit through our masterclass at the end. They get 52 videos. It's a ton of education. They read the book and then they just join our elite mastermind. And now every week they're going through deals. Everybody's brings a deal. They're going through income, expenses, location, back a napkin, dialing into the pro forma tool. They're understanding the mechanics, the metrics, all of the economics of this thing. And they focus maybe 6 months on just learning. And learning comes through repetition and real world examples. We've seen these people that come in with really no money of their own, but now they like you said, they know the deal. The deal hits them in the face or they know how to make a deal. And now where does the capital come from? Well, they're part of a community, by the way, of other people that have capital they want to deploy. They're starting to become thought leaders on our platform, or maybe they're thought leaders in their own right through their own email or whatever the case is. But they focus more on the deal first. And I think that's what you said. You can't just focus on the deal and not network with anybody in the world and just sit in your basement, find a great deal, and then you have no one to raise capital.
No, it's both. It's both. You've got to do both. And we talk about that a lot. I always tell people collect units, collect people, right? If you want to build a portfolio, collect units or doors or whatever you want to call it or pads, and you collect people. You collect people meaning like collect people that like, know, and trust you because you're actually a good person and you actually know the business and you actually can communicate. And that's a really important piece. But I think that like it's hard to collect people who like, know, and trust you in the game of real estate if you don't know real estate. You know what I'm saying? You got to know that you have to know the deal. So I think that's really important. Now, once you do know the game of real estate, and I say this all the time, you could be at the table and people like, know, and trust you, and you have a deal, and no one is ever going to ask how much you have in your pocket. No one cares. Nobody cares because you have a deal and you're valuable and you're a trustworthy person, right? So I think it's really important that that you put those things in place, and then after that, you start to, or in parallel, you build your network. Travis and I, at least for me, I can say I didn't build my network for a number of years. I didn't think it was really that important. I thought, well, I've read the books and I bought a couple of duplexes and single family. What more is there? And I didn't realize that to scale, it's a team sport. It's like we're all working together to go achieve this thing, and it's a team sport. And I discounted that. I didn't realize the importance of that, and I didn't realize the importance of a network for all the reasons, not just deals, but also just mentorship and friendship and motivation and mindset. All of those things. So I think in parallel with understanding the deal, understanding the tactics and the fundamentals is building your network with people who you like, know, and trust, and they like, know, and trust you as well.
Real wealth and cash flow can be created out of thin air if you can pair the right deal with the right capital. And then you unlock a ton of value. Everybody wins. Your tenants win because you're improving communities. Your investors win because you're providing a return. You're winning because you're taking a piece of the upside. And it truly is magical. I would say the last piece though, and this is where a lot of people in our elite mastermind, they build the network and they find the deal or they make the deal, they negotiate the deal like we talked about, and then they close on the deal. And now comes the operations. Now you have to execute on your business plan. So that last pillar, if you're keeping it simple, is the operations piece. Who's underwriting the deal? Who's transacting the deal? How do you run your due diligence? You close it, and day one operations. You're signing leases over, you're building out your software, your management in place. There's a lot of things that you do have to learn on the operations side because to unlock said value, you need to have good operations. I mean, we've seen people that have bought good deals, but didn't have the operations and it didn't go well. Or they had great operations, but it was a crappy deal and they overpaid. We saw a lot of this in multifamily, people going in at full caps, crap like that. They executed. We know a guy that doubled the rents. He overpaid, I think, for the property, but then he doubled rents. He did the cost takeouts, had the right team, did everything, but he underwrote the deal wrong and he made some invalid assumptions around interest rates and debt and things like that. So there's a lot of pieces to it. It really isn't as complex as when.
Here's the thing. Every real estate opportunity exists with three main components or pillars: deal, capital, operations. Those are all out there. There's a deal out there right now. The seller's just sitting there. And if you call them and you have the right conversation, you could buy the deal. There's also capital partners out there. They're out there. They don't know you yet, maybe, or you don't know them, but they're out there. They have money in their pocket, or in their bank, it's rotting and depreciation and the dollar's depreciating. The debasement is happening and they have a problem. They want to invest capital, but they don't know you yet. And there's also operational partners, whether that's on-site, off-site, third-party operational partners like we have, who are truly partners in sharing the upside. They're also out there, but you don't know them. And so what I'm saying is that it's all in place, and it's the job of the real estate entrepreneur, the real estate investor, to put those pieces together and get everybody talking. The seller talking with the bank, the investors, the operational team, all those things together. And when you put those together and you're sort of the puzzle, right? You put the puzzle together, you unlock value. But what's true is they're all out there in the economy right now. And when you learn the game and you understand how to put it together, then you're able to go scale.
Last piece I'll add to that is consider bigger properties. Bigger properties are easier to finance. Bigger properties are easier to partner with people with capital. Bigger properties are easier to get operations team in to execute on your business plan and operate the asset. Duplexes, threeplexes, single family houses, great to start. If you truly want to scale and start benefiting from forced appreciation, the velocity of capital, operational partners, good debt financing, those types of things, you need to start considering larger commercial assets.
Good point. All right. We'll catch you guys on the next one.